everyone. Shirley here. I focus on proactive steps my clients can take to scale their businesses. And while I focus on business development and strategy, I know that managing risk, those things that you can't control, is equally important. Even if you are successful and win profitable federal contracts, those profits and the viability of your company could be in jeopardy if you haven't taken the steps to protect yourself, your company, and your assets from the unforeseen. So today we're talking about the business risk that must be addressed by small growing GovCons to ensure their critical assets are protected. To help me address these matters, I reached out to Vinay Galloway, Vice President of Commercial Sales at Brock Norton Insurance. Welcome, Vinay.
Thank you, Shirley, and it's a pleasure to be here. Thank you so much for having me.
Well, it is a pleasure to have you. Please tell our audience a little about Brock Norton and what you do.
Sure. And again, thank you so much for having me. I'm really excited to be a part of this podcast. I've heard so many great things. Well, Brock Norton Insurance is an established agency in Northern Virginia. We opened our doors in 1992 and have been assisting businesses across the country with their risk management and insurance programs. I personally am the Vice President of Commercial Sales for the agency, and I actively engage with business owners and the C-suite to procure insurance, mitigate risk, and strategize techniques for loss prevention. We differentiate ourselves by focusing on educating ourselves and our clients so that they have the tools they need to make the best decisions for their unique situations.
I am so impressed with your approach and have been looking forward to our conversation today, Vinay. Let's begin with some definitions. Exactly how do you define risk and its impact on government contracting?
Great question. So first, let's define risk. So when insurance people talk about risk, there are only two options in pure risk. There's either no change or a loss. If there's any opportunity for gain, that is defined as a speculative risk and therefore not insurable. So making sure the concerns of these companies face are ones that can actually be transferred to insurance is paramount. As far as the impact, I think there's a lot of misunderstanding around risk and how insurance works. I mean, this is by no means specific to the GovCon industry, but I think they are more impacted because these companies and agencies they contract with are larger, more sophisticated, and have very deep pockets. Most people don't start a GovCon thinking about the insurance piece, but they absolutely should. I find that the managers and executives that take an active role in their risk management and insurance programs ask more questions, have a deeper understanding of the insuring agreements within those policies, and are just overall more proactive than reactive when it comes to claims.
That's an important point, Vinay. In your observations working with your clients, what would you identify as the three key areas growing GovCons should focus on when managing risk?
There are so many, but those that are on the smaller side should really focus on professional liability or errors and omissions, their surety risk, and of course, cyber liability.
Great. Let's take these one at a time. Tell us about professional liability.
So most companies start with general liability or a business owner's policy. These are great products for home-based businesses or even those that are still under $5 million in annual revenue. That will be our definition of smaller. These policies provide a very basic level of protection, but it does not cover everything. The main purpose of a GL policy is to protect you if your negligence causes bodily injury or property damage to a third party. However, it does not cover your work or errors and omissions made in the course of your work. For example, if you're an IT managed services company and you accidentally lock all of your clients' logins to a system they depend on daily and you cost them a full workday, a GL policy won't respond, and there is a very specific exclusion to damages caused by your work. So if you do accidentally cause financial loss, whether you're a contractor or a consultant, you should absolutely carry a professional liability policy. And they're often also called errors and omissions, E&O policies, or even malpractice, depending on the industry.
Yeah, excellent. That was a good explanation there. And the second area you mentioned that government contractors should focus on is surety risk. Explain what you mean by that.
I cannot tell you how many contracts I've seen won and then re-awarded because they were not able to secure a bond for work. My advice to anyone seeking surety is please start this process when you know you are going to bid, especially if you do not have past performance or you're attempting to move up a tier in the scope or size of the project. And also be sure to have your financial house in order with documentation at the ready. Obtaining a surety relationship is much like having a banking relationship. You want to put your best financial foot forward.
So, what does that entail, Vinay?
It means 5 things. 1, having copies of your personal and either audited or reviewed business tax financial statements for at least the prior 3 years. A WIP, or what we like to call a work in progress report, showing your current work and any outstanding payments and any active bond lines that you may currently have in place. 3, a complete financial statement for your personal finances with bank accounts, your investment accounts, and if you're married, the same for your spouse. If you have a credit score below 700, it happens. Work with a credit counselor or discuss having a cosigner for your bond. And lastly, if you are not able to secure a bond, you can put up the collateral, pure collateral, or a cashier's check of 20% of the bonded amount. Obviously not ideal for smaller contractors, depending on the size of the contract, but it could be an option if you're still in the process or underwriting is taking a little bit longer. And it just is an ability to help you bid before you actually secure the bond.
And the last category you mentioned, Vinay, is cyber liability. And this is one that's on everyone's minds these days.
Yes, it is. I giggle, right? But IT companies that are aligned with the DoD's team in C-level 2 or higher are already aware of the importance of cyber liability. But for the GovCons in construction and consulting and other areas, there's a much slower migration to purchase this protection. They often cite reasons like, I don't take credit cards, or I don't keep any data locally, I have a cloud provider, as to why they don't need this policy. But cloud-based storage, while protecting data from local loss or destruction, is increasingly attractive to hackers. In IBM's 2022 Cost of Data Breach report, 45% of data breaches occurred in the cloud. And you can still be liable for the information you put there based on the user agreement you have with the provider. So always go back and reread those agreements just to really see what your liability is. I see claims on a monthly basis from various companies in all kinds of different industries that have experienced social engineering schemes, malware, and even bank fraud to the tune of tens, if not hundreds of thousands of dollars. Ransomware is now one of the leading means of attack for cyber criminals, and just threatening to release data is proving to be more profitable than stealing it and selling it on the dark web. Now, not all cyber liability policies are the same, so really want to look out for first-party coverages, third-party coverages, and cybercrime endorsements. That's the best way to ensure you're fully addressing the risks that your business may be facing.
This is so scary. Vinay, I'd like for you to elaborate a little bit on cyber liability.
Sure. Definitely the topic of conversation right now. The market has retracted drastically in the years following the pandemic due to increased claims in this space from the immediate shift to work from home. Many business owners either did not know how or did not have the funds to securely move to a fully remote work environment. And many networks were left vulnerable. And this is not just an issue for large Fortune 1000 companies. This has far-reaching impacts on all businesses in both the government and the private sector.
I would agree with that. That's certainly my observation. So, how difficult is it to obtain cyber insurance?
Okay, well, it's definitely more difficult than it has been in recent years past. In fact, from 2006 probably to 2016, it was still a new burgeoning coverage, and they all use different language for similar coverages. So one might call it phishing, another might say social engineering. Those are the types of things that were just a little bit different between them because there wasn't a standardized policy. The industry wasn't really sure how the market would evolve, but knew the days of the 1 million policy for $800 would be very short-lived. And then, as we evolved from 2016 to about 2020, we've seen emergence of more expertise in the space, regulations involving privacy, and cybersecurity pressing more businesses to secure coverage. And now in the post-pandemic market, we're seeing fewer carriers than ever before offering, quote, more stringent underwriting and a reduction in limits offered. Best way to ensure you get the coverages that you need to perform for your contracts is to, one, review those applications with your IT department to ensure that you're compliant with the controls in order to even get the policy. Two, make sure any necessary upgrades or changes to your system to truly safeguard the information and systems in your network are done regularly, the patches are done, encryption is used, all of the following. And three, prepare for sticker shock. These policies have just increased significantly over the last 5 years. Due to the changes that we just spoke about in the overall insurance market and reinsurance market, it's just more likely to just keep creeping higher. Especially if you need limits over $5 million, you're going to probably have to get that through towers or layers of insurance from different carriers as opposed to full limits from just one.
Okay, so now that we have scared the heck out of our audience, Vinay,
I apologize.
no, this is good stuff. We need to take a break. I'm talking to Vinay Galloway, Vice President of Commercial Sales at Brock Norton, about managing the risk in your GovCon business. When we come back, we'll talk about the insurance requirements associated with government contracts. Stay with us. We'll be right back.
Shirley Collier, President and founder of Scale to Market, is your host for this Growth Masters Federal presentation. Scale to Market helps businesses think, plan, collaborate, and build market value by developing and executing customized data-driven business development playbooks, building efficient information systems, and creating high-performing BD teams. Utilizing the proprietary Davy Business Development Growth Framework, Scale to Market partners with business owners and executives to increase their company's value by achieving profitable and sustainable growth in the federal marketplace. Email Shirley at scollier@scaletomarket.com to learn more about the Davy Growth Framework and how it can be instrumental in helping grow your federal contracting business. Back now to Shirley's conversation with Vinay Galloway, VP of Commercial Sales at Brock Norton, on how to mitigate the unavoidable risks that come with growing a business in the federal marketplace.
Welcome back. Before the break, we were talking about cyber insurance. Now let's talk about specific insurance coverage that is required in many federal contracts. Vinay, should business owners seek to maintain those coverages that are required as a best practice?
Well, the short answer in insurance is always, it depends. With smaller contractors that do not have unlimited funds to spend on insurance, it may be worthwhile to review the limits requested in comparison to the annual revenue of the business and the scope of work. In most instances, we want the insurance line to be less than about 5% of the contract value, especially for contractors with revenues under $2 million annually. At times, the revenue may not even support the limit requested. So let me give you an example. If I have an 8A and making about $2 million in annual revenue, and I win a huge managed services contract, but it has a boilerplate requirement of $5 million in cyber liability. Well, the market will likely not support that limit without an excess policy. And depending on the cost of reinsurance for that policy, it may prove to be cost prohibitive as premiums could easily reach over $25,000. For middle market companies, they will likely have less of an issue in securing and paying those larger premiums and are therefore more likely to retain that level of coverage regardless of the contracts in play. Either way, finding an agent that has experience in working with government contractors that understands your operations will undoubtedly be the best practice.
I agree with that 100%. And I would add that in your 8A example, many times the insurance provisions of a contract can be negotiated with the contracting office, especially if you're a small business.
correct. And we actually actively negotiate those. A lot of times I can write letters on our letterhead explaining conditions in the market and what the underwriters are seeing and saying, and communicate that back easily to your contracting officer. So that way you don't necessarily have to be in the tangle, especially if insurance is not your strong suit.
Yes, I love it. I love it. Thank you for that clarification. So, Vinay, outside of contractual requirements, how can business owners assess if their insurance is adequate for their exposure?
You really have to have a good agent on your side. Vet your agent to ensure, one, you trust the person you're working with, and two, that they're knowledgeable about the needs of your industry. In these changing times and in this economy, we say that, but finding an agent or broker that is willing to provide additional value through consultation and education is priceless to your solvency. We can't expect business owners to know all of the tax codes, so we ask them to get CPAs. We don't ask them to know all the ins and outs of corporate law. They hire a corporate attorney. And insurance is no different. Risk management and compliance should be viewed as a team sport between your advisor and the leadership team, with a frequent exchange of information. Naturally, the more engaged in the process a business becomes, the more versed or sophisticated they will be in future acquisitions or even when handling claims.
And speaking of claims, no one likes to deal with claims,
Nope.
but they do happen and can be very stressful for all involved. What advice do you have to help mitigate claims and the administrative burden of handling them?
You are absolutely correct. No one likes claims. No one. But they are very much a part of doing business. One of the best things to do, and start now if you have not already, is to document. There's never been an instance where someone said I had too much information when a claim arises. Especially for liability claims, these tend to be the longest in terms of time and effort as the damage is not easily quantified. So keeping your paperwork and contracts well organized so they are easily located, taking photos or videos of property and receipts for new purchases and capital investments, having an HR function that is well trained and practices a culture of documentation. All of these things will definitely decrease the time, effort, and work needed to compile information should you have a claim. And again, I sound like a parrot, but work with your agent or broker to answer any questions or concerns you may have first before even calling in that claim. The second it arises, contact your agent or broker. Although the carrier has the final say on claim acceptance and payment, they will always work in their best interest, including settling even if you're not at fault. I know no one wants to hear this, but insurance is specifically designed for high-severity, low-frequency claim scenarios. So to really decide which claims are worth submitting and which can be absorbed is a conversation you really need to have with your broker agent. So for that reason, we always recommend you speak to them first and foremost, as we tend to be more responsive and can actually advise you on the process, what to expect, and how to not talk yourself out of a claim payment.
Absolutely. Vinay, we are in an inflationary period right now. How do you think this will impact insurance rates for business owners in the coming years?
The largest impact is the increased cost of claims and claim adjustment. So we've already seen this in the auto line of business, which is traditionally the worst performing of all lines of insurance. So we've seen supply chain disruption, increased cost of parts and time of repair. We've seen the cost for used cars and even the parts just skyrocket. We're also seeing more catastrophic storms. So these 100-year storms are becoming 5-year storms. And our 10-year storms, we're getting 2 of those a year. And those are just drastically increasing reinsurance rates and even causing some carriers to pull out of markets altogether. I'm sure you've seen State Farm is no longer writing new business in California. Another insurer pulled out of Florida completely. So I believe it was Farmers. So I would predict that prices will continue to increase regardless of your claim experience and even higher potentially for those who have had losses.
What do you recommend businesses do to hedge these potential impacts?
Okay, well, I've got 4 tips that typically can help. So the first is make sure property policies have inflation guards set to at least 4%, but it can be consistent with changes. I think most carriers offer an inflation guard up to 8%, some maybe even a little bit higher. So definitely check your property for that endorsement. The second is consolidate where possible. So many carriers will give discounts for multiple policies. A new business is typically discounted heavier than renewals. So marketing your policies every 2 to 3 years is what could help you save premium. Third, invest in training and support for new staff and offer incentives to retain your employees with strong institutional knowledge. Definitely, if you have those core members, those key employees, try to put the golden handcuffs on. Lastly, working with your broker or agent to strategize and plan based on the goals that you have for the organization. Have time to review options, gather quotes, rather than scramble on a hastened time frame. This will likely provide opportunities for more cost reduction.
Those are excellent recommendations, Vinay. Are there any other GovCon specific recommendations you can provide?
Yeah, sure, so many. So in terms of making your life easier when obtaining insurance, just remember policies are rated based on all of your operations. So it is important to be specific in your verticals. If you're a janitorial company, maybe we steer clear of putting Black Hawks with Marines jumping out of them on your website. It's very hard to tell an underwriter that's not part of your operation when it's prominently featured on the website. And I also understand you may want to put 80 NAICS codes on your services page to capture more opportunities. I see this all the time. But that makes it nearly impossible to contemplate the extent of risk your business takes on and will lead you down a very frustrating road of definitions in terms of insurance. So we also encourage you to ask questions. We don't know what you don't know, and asking questions is a great way for us as your agent or broker to get to know you and for you to get to know them. And lastly, review your insurance when you get your policy documents. Just take a quick perusal, a few minutes to review the coverages, make sure that the addresses are correct, the business classification is correct, your phone numbers and contact information are correct, because all of that will be pertinent if you do have a claim, and it'll help you learn where things are so you can find information quickly.
That's very interesting, Vinay. I never would have thought that marketing would have an impact on insurance coverage.
Mm-hmm.
And those 80 NAICS codes that you mentioned, they actually decrease a company's credibility. So I always advise to have many fewer than 80 to be very, very targeted. So what are the biggest mistakes or misunderstandings small GovCons have regarding risk in federal contracting?
Well, the top 3 that come to mind are, one, being box checkers. So I understand insurance is tough, it's dry, it's not the most exciting for most people, and it's not at the top of most people's list of fun things to do, but it is so important. Adding or deleting coverage based solely on contracts can be a recipe for disaster. There are plenty of ways to endorse or change limits that can help save premium without leaving you just out in the wind unprotected. Secondly, just not understanding that premium changes are not solely based on claim history. The amount of times I've heard I got a price increase, but I haven't had any claims. I get it. As I mentioned prior, it can feel like a personal attack when your premium increases and you've paid your premiums on time and have reported no claims. But I assure you, there are hundreds of variables that impact premium changes, and claims is just one of those factors. The overall market has a much more significant impact on the pricing changes, as well as the factors we touched on earlier, like inflation, cost of acquisition, cost of policy administration, overall loss ratio, et cetera, et cetera. And lastly, procrastination. In the GovCon space, there's a lot of waiting around to see if you've been awarded a contract, and then a fire drill happens once the news drops. But by this time, the insured has had an idea or at least a draft of the contract and the requirements therein. During this waiting period is the best time to loop in your broker or agent. They can start to look at markets, approach underwriters, and start applications. Even a week of preparation will make the transition easier for everyone and a much smoother process. Whether you win or not, it shows a proactive approach and therefore moves you up the chain as your broker's favorite client.
Excellent, excellent. Well, folks, you have heard it from the expert. Let's summarize. As a minimum, you should have professional, surety, and cyber insurance. Ensure your documentation and operations are sound and sweat the details. Find an agent who is patient, informative, and knowledgeable,
Thank you.
like Vinay. They should be consultative to help guide executive decision making and not just write the most expensive policies. Vinay, thank you so much for sharing your insights with our audience today.
My pleasure, Shirley. I had a great time. Happy to do this whenever. And a lot of people don't know this, and let's throw this quickly in there, but I got into insurance because I was in a terrible accident, and I walked away with my life, thankfully, but only $5,000 for my own policy. And I promised that no one would get that type of treatment on my watch again. So I'm very passionate about what I do, and I love helping business owners. So if you are listening out there.
Excellent. There's no better teacher than experience.
Right.
Well, it's been great having you, Vinay. Folks, if you would like to get in touch with Vinay Galloway, Vice President of Commercial Sales at Brock Norton, she can be reached at vinay@brocknorton.com, and that is VENEE. Or you can reach out to us here at Scale to Market, and we'll make sure you're connected. This is Shirley Collier, President of Scale to Market and host of the Growth Masters Federal Podcast, signing off for now. As we close, I want to thank you for joining us today and encourage you to connect with me on LinkedIn and visit our website, that's scaletomarket.com with the number 2 in the middle, where you will find our library of podcasts, webcasts, white papers, my blog, and other links and resources. While there, please leave us a comment or suggestion so we can stay focused on what's important to you. We'll see you next time.